Hi guys, this is Simon with Trade and Perform Coaching, doing the trade review for ES for the 8th of September. Before we get into it, wanted to go into a couple of things coming into the day. The first one is this 2K area has become a battleground, and also we've been stuck in a really tight trading range, and the trading action has been particularly lethargic, and that has made trading really difficult for a lot of people. Okay, so that being said, right, that the trading action has been lethargic for a lot of people, what does that require? Well, it requires us to make a shift from being very fast, responsive traders, right, to being slow, patient traders. And one of the things I hammer on when I'm coaching people, when I'm trying to teach them how to trade, is find out which one you're better at, right? Some people are really good at slow, methodical markets. Some people are really good at really fast, quick markets. I happen to be good at really fast, quick markets, and I struggle through slow markets. So one of the things I do in the morning in my preparation for the day is I know in a slow market, and I already mentally slow myself down, knowing that it's going to be somewhat boring. I may plan not to work the whole day or not to trade the whole day, right? And I plan to click less early on in the day, actually throughout the entire day. Why? Because when we get into slow choppy markets, the tendency is for people to get nervous in those markets and to bail on those trades quicker than they want to bail out. And also, when it gets to key support areas, it can kind of park there and sit there for an extended period of time. So that being said, let's go through the day really quick and look how it's set up. So we actually had quite an odd scenario in ES. We actually had a small gap down, and then Q, right, our healthy sister over here, NQ, we had a flat opening, and we actually ended up with an open drive higher, but it was within range. What that means is because we opened and we were within range, this is easier to see on the volume profile, so I'll go over and show you wrong chart, but I'll pull it up here quickly. Okay, so within range simply means that we've been trading basically this 4060 to 4050 has been support, right? And this 4106 really to 4100 has been resistance. And we've been kind of bouncing in this area for multiple days. But when a market breaks out, right, you can see here on this volume profile chart, see how we closed here and we gapped up to this point and then we ran? There was nothing preventing us from running to the upside here. But when you open and you open drive within range, you have this overhead resistance to deal with, so it makes it harder for us to keep ripping. And this is distinctly different, right, than the market we were dealing with just a couple weeks ago, where we just kept driving up and up and up and up no matter what, right? We're starting to get a slow motion two-way action, and it's really throwing a lot of traders, right? Because what was everyone doing here that was making them so successful? They were buying, and they were really pushing to hold through here and getting rewarded for it now, and really getting rewarded for it. So what you'll see now, both in ES and NQ, is if you execute that exact same concept, if you execute that exact same concept right now, for example, let's say in NQ, you said, oh wow, oh boy, let's say you ended up chasing a little bit and you took it here, right? You took it up, well, it came back, that's fine, you survived the first test, took it back up again. But now you didn't survive the second test, and it's very likely that if you were waiting for this push to the upside, you ended up getting smoked to the downside, okay? That can be very frustrating when just a couple of weeks ago, we were getting this and then a continuation up and your accounts were really getting rewarded. And by the way, that is how traders go from boom cycles to bust cycles, is they don't catch that there's been a change in the way that the market's behaving, and therefore they don't adjust their trade plan, or they don't or they're simply always trying to kill it, not recognizing that they're in the wrong environment to kill it, and so they end up getting killed instead, right? So what we had here, and I want to go over the basic concept, right? The basic trade plan calls for first time into the zone, right? I expect to move up into the zone and a 2-point rejection down. We achieved that right away, right? We didn't quite get 2 points out of the front of the zone, but it did roll over. The stop was 2 points behind. The only caveat I ever put on this is I will put in place for some of my traders a 25-minute stop, and that 25 minutes. So one of two things would have been accomplished here. Either you took a stop with a very small loss here, or you got paid, one of the two, right? In the live market preview, which is a members only portion of what I do in the morning, right? I had stated that I thought Globex low was in a really poor area. I wasn't looking to trade there, and that the first area I was looking to trade was in the white zone. The white zone is important. It's usually a very important area, and usually I'm pretty patient on it. So what was different about today? Well, first of all, without going into too much complication, you can see that we had a wedge that formed here, and the wedge broke to the downside, and usually I like to let these stretch down pretty good, but it was also deceiving, right? If you look at the time of day, this middle time of day right here, this 11 to 12:30, is a really hard place to trade. If these zones are going to break, they're very likely to do so over New York lunch. So this made this move into the zone anxious for me, I guess, for lack of a better term, right? The other thing that I said I was looking for in this zone is I wanted 1 minute tick divergence when we moved in. That was part of the trade plan. I don't have the recording of this, but I will start recording them and posting them in the AM. Okay, so the this move was accompanied back here. If you'll go to a 1 minute tick divergence chart, I'll show you really quickly here. See if I can find it. Keep track of time. Okay, so you can see here we had two things occur. First of all, we hit tick extreme right here, right? That aligns with the entry into the top of the zone. We then moved to the back of the zone right here, and starting here down to here, we got 1 minute tick divergence. You can also see in this area that even though we got the tick divergence, that it can still kind of push against you to a certain degree. Now, I have to tell you, the reason I have a 25-minute rule is because normally in most markets, and particularly fast markets, when we sit in a zone like this for 25 minutes, it's highly likely that it's going to get broken. So I have to make a judgment here, and that judgment is, do I want to sit in an area where we're consolidating for a long period of time, and in what has turned out to be, right, we're having lower lows and lower highs, right? Do I want to sit on that? Or do I want to go ahead and take that trade and accept the loss? It's one of the two, right? If you have the proper stop behind, right, and you've pre-planned the trade, the worst you're going to do is lose 2 points behind that zone if you think you've got good trade location, right? Now, in my particular case, I don't really like trading at that time of the day, and really the trade that I was looking for was I was hoping we would come up, set a new low, then come back up and trap, and then push hard at the end of the day. So that didn't set up for me. I didn't take this trade today. I should have, looking back on it, but you know, the shoulda, couldas don't really count. But what the other part that was important about my trade plan is, you'll notice I had no zone. Okay, I had no zone from here all the way down to here. And you could have said, well, Simon, you know, clearly you missed this area right here. Well, that's true, except for one thing. 2000 has been a nightmare to trade. We've traded through it up in both directions repeatedly. And one of the things that I look to do, not only am I looking by placing these zones for key trade location, but I'm also looking to avoid areas that will either raise my anxiety levels about taking the trade, or potentially can hand me a quick loss or create confusion for me. I want to trade in areas of clarity, not confusion. So for me, that's a win by not putting the zone there, right? And as you can see, we still had plenty of trading opportunities. We had a very nice stretch to the downside. If you, I did not take the short this morning because I'm generally on the short strike right now. I just think it's easier. The one trade that I did take today that was to the long side was in NQ, and I'll show you that trade. So on the retrace here, this was roughly, I'm not going to go into details, but this was just past, this is a trade setup for me, and it's just past the 50% retrace. I cover this in the live market preview, and on those days when I stay on live in the room, I cover this. This is a 50% retrace right here, and the first time in made a lot of sense that we were going to get a retest, and that was my one trade for the day. I sat very patiently, and also I was prepared to take a long from this 4075, 4071 area, and I missed my entry by 2 ticks. And that kind of sucks when that happens, but there's not much you can do about it. It was obviously a good trade. It would have been worth approximately 20 points to the upside. Oh, and then I have one other point, right? One of the things I like to do is keep track, which ones are the most powerful drives up and the most powerful drives down. Well, look how long it took to make this move to the downside, right? This really took us from the time we set a peak from 9 a.m. all the way over till 1 o'clock. Okay, this took us from 1 o'clock till market close at 3 o'clock, 2 hours, right, to recover all of this. Well, not all of this, but the gross majority of this. And not only that, but it was pretty much in a straight line, right? It made it very difficult. If you shorted any of this, not just to get bone crushed. And that's been happening day after day. It's one of the patterns that's been prevalent. This pattern will end, but I don't know when, right? So again, one of the things I want to stress about the zones, they give me great trade location, right? They tell me, they let me pre-plan my trade the night before. For example, I've already posted the zones this evening, and I know exactly where my stop is, and I know exactly where my exits are going to be. Okay, so all of that is pre-planned. All I have to decide, I simply have a simple decision to make at that point. That leaves me free to have to figure any of this out. There's nothing to think about here. All I have to focus on is this area, and then if you'll look, there's areas above. These are all the areas I have to do my critical thinking. The rest of the time, I don't have to spend the day constantly figuring out what's going on, or more importantly, right, what's not going on. Now, according to Mark Douglas, who I think is fantastic, and I follow his trading methodology when I'm coaching others, along with Dr. Steenbarger and Dr. Andrew Menaker, okay? And one of those things that all those guys will really stress or emphasize in there is that it is important that you're able to pre-plan your entries, your exits, and your stops, and that you know that. Why do you want to do that? The advantage that gives you is that, number one, you know exactly what you're going to lose on the day if you have a losing trade, right? Number two, you're not constantly trying to figure out the market. When you think when the market's open, that creates anxiety. Anxiety, right, shifts your brain from a calm, focused, and measured decision making to a fight or flight thinking mode. When you're in fight or flight, you're not following trading rules, you're not following trading plan, and you're probably not following logic, which is why traders all the time go, oh, why did I do that, right? Why did I stop my trade out early? Why did I cut the profit short? I had it. And the reason why is because you don't have a set trade plan. If you pre-plan your entry, your exit, your stop, first of all, it forces you to verify that you actually have an edge. Secondly, it forces you to put your trading plan in writing, right? And then once you're done with that, you're actually accountable for the steps you take. Did you follow your entry? Did you follow your exit rules, right? And then did you stop and get reset and wait for the next setup? And if the answer to that is no, I didn't stop and get reset, right? It's very likely that after your first profitable trade, if you're one of those overactive hyper traders, right, you missed your trade. Or what you did, if you took your next trade, right, and you try to flip it maybe back to the short side or catch to the long side, and you got smoked, right, and you ended up giving back the profits, or at the end of the day, you've run so many trades, you may actually be up on the day, but you're down P&L-wise, commission-wise, right? Okay, then you have the traders with the other side of the problem, right? Those traders that don't pre-plan their trades, so that everything they're looking at is agony, right? They can't pull the trigger because they can't accept the stop because they don't know what the stop is. Not only that, but they don't know what the stop looks like. They haven't either back-tested or forward-tested in paper. So they don't know what the trading looks like on a spreadsheet, right? And they don't have the certainty that I have, that I know. For example, I know my zones pay me 70% of the time at a minimum, right? It dropped to 67% at one point this year. But the majority of the time it's 70, and quite often it's sitting at 80 to 85%, depending on the type of market that we're in, right? Because I know that, usually I can take my trade without blinking. Now, there's times when I just say I don't feel like I have the wherewithal to take the trade, or that I can't follow my trade plan, so I'm not going to trade. That's an option. But once I'm in the trade, I know what I'm doing. I know that I have a time parameter on that trade. I know I have a set stop on that trade. I know I have a target profit on that trade, right? And most of my worrying or figuring out has already been done this evening. So I would encourage y'all all, first of all, Mark Douglas has written excellent books. Would recommend you read that. Secondly, make sure or verify that you actually have an edge. Don't guess. And it's been my experience that if you're using anything like Woody CCI, any kind of trailing indicator, right, which most stochastic type indicators are, you're probably getting smoked in day trading. They work sometimes, they don't work other times. Okay, price location, price action, and rotation size is all that matters in ES. That's what gets you paid. So anyways, my name is Simon. I'm a Trade and Perform Coaching. I hope this helped. I hope everyone had a wonderful day, and I'm looking forward to making money tomorrow. If anyone would like a trial to the live market preview, please email me at tradeandperform@gmail.com. It's spelled just like it is on the Twitter and StockTwits handle, right? Well, I'm more than happy to extend a 7-day free trial. It's only $95 a month. That's for charts in NQ, ES, and CL, right, along with a live market preview every evening. And I have now started doing a private, very specific trade review probably 2 or 3 times a week with both coaching tips and specific setups that we've gone over during the day and reinforcing what worked or what didn't work. So I'm pretty sure for $95 it's probably the best value out there. You get my 20 years of experience in trading, and I've helped a lot of people go from being frustrated losing traders to first being break-even traders and then being consistently profitable. So anyways, I hope everyone has a wonderful night.